Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report, and we can read the synopsis on top. The Eurodollar is holding below triangle support. The bear trend that took hold in July may resume now and lead to a drop below 123 within the next several weeks. So let's scroll down, see what he has to say more specifically about the euro, with price staying below the underside of the triangle support line. I'll go more into that once I do bring up the charts. It is possible that the triangle is complete at 129.32. If so, then the Eurodollar will likely break to a new low below 123.26 by the end of November. Also scrolling down to the dollar yen, as that's what I have been focusing on in my reports, and Jamie's been spot on with this pair for the past several months. I'll just read a little bit of the synopsis. The larger dollar yen trend is down, so strength should be sold. It's unclear, though, whether or not the rally from 90.86 is complete. As long as price remains below 100.60, bearish potential is significant. So let's go ahead and pull up the charts. The first chart I want to start with is the Eurodollar. As Jamie was mentioning, this is the triangle that he was speaking about. This is commonplace in fourth waves, and what we have now is a breakout below the lower support line of the triangle. So, and when Jamie wrote that report, he was mentioning a break just beneath the support line, and we could see that prices since that point, since Jamie released his report, have fell nearly 200 pips. So, moving forward, what do we do with this information? Personally, there's nothing really that I would say right now in terms of entering a trade. Ideally, what I would look for is prices to rally up and test the former triangle support line from the opposite side, at which point we would expect that line to act as resistance. So right now, over the next several hours and into tomorrow, I'd look for that 127.50 area. I realize that's a little distance away, but with volatility being so high, it's not out of the question to look for a move such as that, where we might look to enter on the short side. Again, this would be the start of a fifth wave, which could have a very high potential of serious gains if you're on the short side. But certainly keep an eye on Jamie's reports for this pair specifically, and all the pairs for that matter, to get more up-to-date information. If you're listening to this report, for example, let's say tonight at late in the morning, 3 or 4 a.m. Eastern Standard Time. So now next to the dollar yen, and this is the resistance line that I've been using for the past several reports. We can see we had that nice setup off the upper resistance line here. Hopefully you were able to get an entry, and nothing's changed. I mentioned yesterday that if you were able to get an entry near that resistance line to hold the trade, and first targets would be near that 96 area, as per Jamie mentioned in his report. So nothing's changed in that. If you are flat right now and you have no position in the dollar yen, I would just keep this resistance line up and look for short entries near that resistance line. And right now it looks like the resistance line is just above the 99 figure. The final chart is the Kiwi dollar. And I was mentioning yesterday, I was looking for a move for an entry down to that 50% fib. We did have a test of that fib level, but we can see it's a little bit messy. There was penetration below the fib level, as well as a few closes on the hourly below the fib level. So I have very low confidence in this trade idea, but it is what I was waiting for, a move down to that 50% fib level on the daily chart. It wouldn't be a close beneath the fib level. So this is something I would right now, again, very low confidence trade idea, but I might adopt a slight bullish bias against the low of the test. And the low of the test of the 50% fib, if you give me one moment here, is about the 156. Let me get the exact print here. 156.84 is the low. So if we can get an entry anywhere near that 156.80, the 56.84 area, that could present a good risk reward. What I would like to see, let's say if you did enter near that 50% fib, more short term, is prices to get above this large candle wick here, and that would be the 57.90 area. So that's something we can look for moving forward, assuming you already entered on that 50% fib level, and we're not stopped out on the slight dip beneath it. So again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.